this session is all about underwriting, and I call it the behind the scenes engine, right? Because if you were to strip underwriting out from our organization, we wouldn't have an organization. Like, it's literally the engine that allows everything to run. And I did an interview the other day with Brian Shaw. He is our senior director of underwriting, and the guy's awesome. I've loved working with him for years. I'm going to play this video. Like I said, Brian couldn't join us on this. I will then take Q&A on underwriting, and then any additional time go back and answer any other questions that are in there. But, I'll just let the video speak for itself.
Hey everybody, Keith Sampson, and I am blessed to have Brian Shaw on this little session for us. Here on the road shows, we're all about trying to help you guys maximize your potential, kind of bringing some new things to light. And Brian is our senior director of underwriting. And I know, underwriting can always be like that, the department that kind of sits off to the side that everybody loves to hate. But in my opinion, I've always had a lot of respect for the underwriters, right? The underwriting team is there, and we're going to talk about some of this stuff, to really help us. Really, the underwriting team needs to be thought of as a partner to help us achieve and maximize our potential. In fact, before we get going, you'll see this quite a bit, but our ISO of the Year award that we got from the ETA, people don't think about all of the other things, but Brian and his team definitely play a role in us winning that award. And we'll kind of talk about that in some of the questions. So, Brian, I'll get right to some of the questions unless you have anything you want to say hi or add or anything.
I'll just say hi. Good to meet the community here, and excited to get started.
Perfect. And, everybody, if I didn't cover it before, please put your questions in the little question profile section right there, in your little control bar. I will be doing questions at the end. Obviously, we're doing this pre-recorded because of Brian's schedule on the road show. Plus, people can watch this in the portal and everything. But yeah, drop your questions. I'll do that stuff later on. But let's just get the basics out of the way, right? Brian, can you please explain the primary roles of underwriting? I'm going to let you talk because people get tired of hearing me talk anyway. So I'll let you explain the primary role.
Absolutely. I think it's a little bit surprising to some people just how much we actually do. We kind of have our hands in a lot of different things across NAB as an organization, but it mostly breaks down into some main pipelines. So I'll go through these pipelines real quick, and then we can talk about any of those that you may want more information on. The primary pipeline, the most important, is new submissions. The underwriting team is really the gatekeeper for NAB. We review all new submissions that come in from all different sales channels, so all roads lead to the underwriting department, and we make sure that this merchant is not going to hurt us, and that's our gatekeeper role for NAB. Aside from that, we also have some back-end responsibilities. Those include things like volume controls. There are volume controls where the underwriting team reviews merchants who have exceeded their approved volume. So it's a merchant who may have experienced some tremendous growth, which is exciting, something we always like to see. We just review those to make sure that they are safe and processing within reasonable limits. We also do volume increases in order to process within their limits. So if they don't go on a volume hold, they can have a volume increase, and that will prevent the holds from happening. And then there's also dormant merchants who boarded with us, never lit up, that we will review just to make sure that they are safe and not a fraudulent merchant if they light up after a decent period of being dormant. We do pre-vets. So pre-vets are high-risk merchants or maybe unique verticals, not necessarily high risk, but just unique verticals that not a lot of sales partners or processing companies work with. We're happy to take those types of requests in the underwriting department. We'll take a look and see if that's a merchant we can work with, if we have a sponsor bank for them. So that's a big part of what we do to help people generate new business. And then lastly, there's a operations management aspect to the underwriting department where we're reviewing tickets that have information update requests. So things like updating a business address, updating banking information, all that kind of stuff comes to the underwriting department. We will review new sales partners and the underlying individuals who represent those companies, those sales companies. And finally, we also have a communication channel that we monitor from 7 a.m. to 10 p.m. And we staff folks to monitor that communication channel. So all those things fall into the underwriting department, and that's how we support the organization.
That's awesome, Brian. Thank you so much. So, I've had the privilege, and I do call it a privilege, of being able to be involved in some of the things over especially the last like 3 or 4 years, right? In 2018, I would say there was a lot of changes that started happening to make, especially the underwriting, more frictionless. And, that's been a lot of fun. And I don't think sales partners really take for granted if they were to look at, maybe they've been with us that long. Other ones that are newer definitely don't know all of the things the enhancements that have been made through the years. But if you can think back like 4 years ago, 2018 to today, maybe tell some of the sales partners, what were the approval times like back then versus the approval times now, and without giving away any of our secret sauce that we kind of have to protect. And guys, yes, I know you want to know everything, but these guys help stop the fraud and the bad stuff, so there's secret sauce there that they can't talk about, right? So without giving up any of that, what was it like 4 years ago versus now, and what are some of the things that we've done over that period of time to get these approval rates and time periods to the place they are today?
Sure, that's a good question. We've experienced some tremendous growth within our underwriting department and also our sales channels. So we've had to adjust and make things better in order to accommodate that growth and also to provide the best possible experience for our merchants and sales partners. Part of that has been increasing the turn time for new accounts. Back in 2018, we were underwriting accounts within 1 to 2 days. So when somebody submitted an account, it could take up to 48 hours for that account to be fully underwritten and a decision to be provided. Fast forward to today, we're now underwriting most accounts within 90 minutes of the submission time. So as soon as an account is submitted, that's getting a full manual underwrite and a decision is being provided within 90 minutes. That SLA, or what we actually commit to, is a turn time is between 90 minutes and 3 hours. So you should definitely have a decision on the account within 90 minutes to 3 hours, the majority of which happen within 90 minutes. So it's been a really big improvement, and we've adjusted a number of things to make that possible. Overall, though, the whole team is just laser focused on providing that fast turn time and a good experience to the merchants and sales partners.
Awesome. And let me add a caveat, guys, for those of you watching. That SLA time is when you provide all of the information. If they have to say, hey, we're missing stuff or we need this based on the business, that may take a little bit longer than 3 hours, especially if it takes you a day to get the information back to the underwriting team. Obviously we can't hold their feet to the fire to hit an SLA time when they need important information to do their job. Correct on that, Brian, would you say?
Absolutely. Yeah, and if anything is missing, we understand that, sometimes all the information isn't available right when you're with the merchant or communicating with them. We'll pend and request additional documentation, but that does always add time to that review. So, if at all possible, it's best to get that stuff up front.
Cool. So to kind of move on again, I tried to pick some questions that really would help our sales partners understand some of the things that are happening behind the scenes, some of the things that we keep doing as an organization to become the strongest company for the partner channel out there, period. Besides being a full stack processor, having all the technology, there is the logic that has to take place to be able to bring accounts on, the opening up the doors and the appetite for acquiring banks to bring accounts on. So we have 6 different acquiring banks that essentially merchants can be backed by. Do you mind explaining a little bit about the process? 2 things. One, the role that an acquiring bank has, and number 2, why 6 banks give us the ability to really serve all of the different types of merchants that we can.
Definitely. Yeah, the role of the acquiring banks, or how we refer to them as sponsor banks, is to provide the liquidity behind how we fund our merchants. So when we're trying to take the proceeds from a day's business, the merchant is batched out, they want to get funded. The bank that's sponsoring us is the one that's providing that liquidity and allowing that money to go through. Meanwhile, North American Bank Card is liable for whatever those funds are, and that's where our risk comes in and why we do things carefully. But that's the main reason for those banks. As such, the banks want us to follow a credit policy that they have in place, and that kind of stipulates how we're able to interact with the merchants that we're able to interact with. Now, as Keith mentioned, we do have 6 sponsor banks, which is really unique most processors will only have 1 to 2, but by having 6, we're actually able to accommodate virtually every business model that's allowed underneath the card brands. Even, you know, high risk verticals, verticals that you don't normally see. Across the board, we're able to accommodate almost every business model as long as it isn't illegal or prohibited by the card brands. And having those 6 sponsor banks allows us to do that. We've recently brought on another, we'll call it a high risk sponsor bank who specializes in different high risk verticals. So that's allowed us to open up the doors to a lot of different merchants that we weren't able to work with before. And it's something that really helps us just help as many merchants as possible.
So, to kind of follow up with that thought process, and I want to be very careful on how I choose my words here. I want to make sure our partners understand that sometimes when there's decisions being made that a sales partner may not like, it may be something we don't like either, but it's because of the rules of the sponsor bank. That acquiring bank has their stipulations that we have to adhere to. Because, and I'll let you comment on this. And I've seen in the past, and again, the purpose of these sessions are not to bash anybody. I'm not going to bring any other businesses to name, but I've seen companies in our space, ISO offices, acquirers, whatever, or our companies lose their sponsor bank. And like I don't think sales partners really understand like how big of a deal that is. Like if you lose your sponsor bank, it's because as an organization, like there's something like not right there. Like, would you agree on that? Like, because I want to make sure people understand the role and the responsibility we have to adhere to the sponsor bank so we don't end up in a situation like that.
Absolutely. That's a great point to bring up. And it also underlines the fact that we do have 6 sponsor banks. That means that we've operated so well that we've gotten 6 sponsor banks to work with us and continue to work with us over time. And like you said, if you have a sponsor bank, they give you a credit policy and you don't follow the guidelines that they ask you to follow, they will terminate that relationship. And these sponsor banks are really kind of the lifeblood of the types of merchants we're allowed to work with. So if you lose a sponsorship that allowed you to work with a certain type of merchant, you don't have a different sponsorship that can allow that, you're done working with those merchants. You can't board that type of business anymore, and that's it. So it's really important to follow those credit policies and to make sure the banks feel comfortable with us as a processor. We focus on that every day within the underwriting department, and unfortunately, there is a little bit of friction there sometimes with what the sponsor banks require, but we're really just protecting the company and ensuring that we can continue to do business like we do.
Awesome. I think that's a great that the way you put it at the end is really, really good, right? Protecting the company so we can continue to help and do business the way that we do. So, guys, as you're watching this, maybe you fell victim. I remember I did, right? I think it was I'll just say it was like a puppy breeder, right? And breeding puppies, like that's just something most sponsor banks don't want to get involved in. There's a lot of risk there because what happens if somebody drops $5,000 on a puppy and then 6 months later that puppy dies and the chargeback, like it's just one of those areas that a lot of banks don't have an appetite to play in. I couldn't board that merchant. You know what I mean? So I can say firsthand I've experienced that, but I understand the bigger picture of is we don't board that puppy breeder because if that does happen and we're breaking the rules and they go, you know what? Sorry, every single partner that's in here that was boarding deals with that sponsor bank now all of a sudden can't. And, I can't risk your success or you can't risk the success of other sales partners based on 1 or 2 mids because in our minds, we might think, why not? It's a great opportunity. But in the bigger picture, it just does not fit within the realm of the appetite of the sponsor bank.
Exactly. That's exactly right. And to your example there, any type of merchant who works with live animals or anything living tends to be a bit more restrictive. But good news is, Keith, if you do happen to have a relationship with that merchant, we could work with them now. I'd also like, yeah, perfect. I'd also like to point out with the sponsor banks, they do regularly audit us, sometimes as regularly as monthly. So it's not so much as maybe we could get this deal through and nobody's going to notice. They would notice. They look at all this stuff very closely. We're under constant scrutiny, and these audits go very deep. So just want to make sure everybody's aware of that and that we're just trying to protect everybody.
I love it. I love it. So, to kind of shift to some of the things that can help the sales partners, right? What are some of the, you and your team are constantly working with so many different things, so many different aspects of the business and new merchants coming in. So sales partners, both ones that have been with the organization for years and some that might be much, much newer to the organization or even the industry. What are some of the constant mistakes that you kind of see made during the application and onboarding process that we can kind of talk about and maybe help the sales partners like address that, and so they can be a little bit more proactive? Then there's going to be less pens, less back and forth, because as a bigger picture, guys, imagine, Brian said we've expanded our team to be able to do that. If we can shrink the amount of back and forth they have to do by us doing a better job on the front end, that's going to mean even faster approval times and more attention paid and better overall experiences. So kind of go into that. What are some of those common mistakes you see that sales partners can go, you know what, I can get better at that?
Definitely. And some of these things might sound a little bit basic, but just these are the most common pain points that we experience when new submissions are coming in. But I think if you can nail these things, you're going to go a long way to reducing friction for the merchant and yourself. The first one is getting the right ownership information. It can be challenging sometimes. Merchants have sometimes complex ownership structures. They have multiple owners, maybe they're owned by a corporation or something like that. But essentially, what it all boils down to is that we're required by federal law to collect the personal information for all owners who have 25% or more ownership in the business. So if you have 4 owners, they each own 25%, we actually need to get the information for all 4 of those owners. And that can sometimes cause additional pens after an initial submission. If, say, we only got 1 owner's information, we know there's 3 more. We have to ask for that information when it could have and should have been provided on the application up front. There's other cases where people will put incorrect personal information for owners. That also comes out during our due diligence process. So then we have to ask for additional documentation or ask additional questions that could have been avoided. I mean, really, the owners are applying for somewhat of a credit line by getting this merchant account, and they should be providing their personal information just like you would on any other loan application. So it's you can think of it that way, and once you think of it that way, they shouldn't really have a problem providing that kind of information. So that's number one. Another thing that we see a lot is business model information is sometimes provided incorrectly. Maybe the wrong MCC is used, merchant category code. That can be something that is misleading to us. So we'll get a submission, we'll see an MCC, and then start our due diligence based on that business model. Meanwhile, the merchant does something completely different, and that can sometimes lead to additional pens that aren't necessarily needed. Um, and also business model description. It's a small field, and you can't put a ton of words in there, but it is very helpful if we can just get a good, short description of what this merchant actually does. That helps us out a lot. Sometimes it's not always so clear, so that's a good thing. Next would be providing the correct ticket parameter information. As I mentioned earlier in this, we do have volume control. So for merchant processes above their approved parameters, they can potentially get put on hold. Bad experience for the merchant, something you definitely want to avoid. If you provide the wrong ticket parameters up front, say undershoot it, what they actually need, that's going to lead to holds in the future for the merchant. It's unnecessary, and if we get the right ticket parameters up front, that can help prevent that. And then the last thing that we see a lot of times is contact information that is incorrect. So getting the right contact information for the owners, getting the right address and email address for the business, really kind of table stakes types things. But when it's provided incorrectly, it makes the account maybe fraudulent, and that can lead to additional pens and things that will hold up that account. I would say e-commerce compliance goes along with that. So if it's an e-commerce merchant, you want to make sure that they have like a functioning website that's actually set up and ready to do business. You'd be surprised how many e-commerce submissions we get where the website can't even be opened or hasn't been set up yet. So I think those are the biggest things that should be the easiest to address.
Right on. And actually, what's funny is I'll use a scenario, guys, and I think you addressed the high ticket, but I also want to talk about the monthly volume, right? And because of our automated process to speed things up to allow people to spend more time on that, I think it's really important for our sales partners to understand if they're going to do $50,000 a month on average, but during the holiday months they might do $75,000. Then put $75,000 as the monthly volume, right? Because if
Exactly.
you approve it at 75 or 80 or 90, versus if you put 50 and all of a sudden they have a high month, now all of a sudden it's stretching the automated process. Again, this isn't Brian and his team being bad guys. It's in the computer system at 50. The automatic triggers go, whoa, they just processed 70,000 this month. That's beyond the percentage of what was boarded at. We need to review this account. Whereas if you were to put 100 and they look at all the parameters and go, oh yeah, we're good with 100, and that hold or that review would have never even happened. And I think that's one that we just continue to try to help educate people on to make sure that monthly trigger isn't unnecessarily taken care of. Correct?
Exactly. Yeah, and if you're looking at retail businesses that have mostly card present type transactions, they're brick
Yep.
and mortar, like those differences and parameters aren't that big of a deal to us. 50,000 versus 100,000, it's probably going to come with no additional requirements on our end.
Correct.
You can have the 100,000, and I would just ask for it. If you think the merchant has a chance of that, or maybe their holiday season's crazy, ask for that instead of asking for, something lower, thinking it's going to be easier to get the merchant in. It's typically only the high risk business models with a lot of future delivery exposure that would require anything additional when they have higher volumes like that.
Yeah, and then on the high ticket one, actually, I had a conversation with a sales partner just the other day, and this is a perfect example, right? It's a I'm going to try to say this the right way again, being on record here. It's a merchant in a demographic that are known for doing multiple things. So they have, let's say, a cafe, and their average ticket is like $35, and all of a sudden they run a $2,500 transaction through. Well, obviously, I don't think anybody walked in and bought $2,500 versus food, and the partner had to go to that because we pended the account and said, we need an invoice. What is this for? This is outside the realm. And the merchant, knowing this demographic, goes, did you sell a puppy by any chance and take a credit card for it? Yes, we did. What? We're not allowed to do that? Yeah, I mean,
Yeah, that's merchants will surprise you sometimes, but yeah.
So it's a funny story because we're sitting here talking about it, and I can only
Yeah.
imagine through your years of doing this some of the things that you've seen come across as explanations or attempts. One other thing too, guys, I want to throw out there because this is oftentimes not understood too. While we're talking about this kind of oddball stuff, is the ability for merchants, and this is a restricted practice. A merchant cannot run their own credit card as a cash advance. Do you mind like touching on that? I don't know how often you see that. I remember having one local account that we had to fix because they were doing that and had to address that with them. But that's kind of one of those oddball things that might be just a little nugget of value that sales partners, especially newer ones to the industry, may not understand.
Definitely. And we're getting a little bit into the territory of the risk team. So I just want to put that out there.
Okay.
I represent the underwriting team and I have oversight of that, which really is the pipelines that I mentioned at the top. But I can speak to the last couple of things you mentioned there. And with owners running their own personal credit cards on their merchant account, they're going to get funded with whatever they process on that card. So, they need cash today. They can do that by processing their own card. However, that's prohibited by the card brands and highly frowned upon. That's something that will get an account closed if the owner does that. It's kind of a like a two strikes type of situation where if they do it once, we'll catch it, ask them not to, and then if they do it again, we'll usually close the account. It's associated a lot of times with fraudulent activity, so it's usually a bad actor trying to get something over on us, and then at the same time, the risk team is looking at all the transactions. They can see who is processing that, and they can tie it right back to the owner very easily. So it's something that comes out pretty clearly when we're reviewing accounts. So yeah, don't do that. We can understand if they're doing like their first test transaction once they get their terminal up and running, and they're doing like a penny or something that makes sense. But if it's a big transaction, that's something that will get caught and could result in closure.
Cool. Yeah, and I'm sorry, I didn't mean to dive off into risk, but I think we've got the attention and kind of talk in this whole area. So sales partners are going, oh, I had this. But yeah, to clarify, guys, once the account's boarded and you guys have done everything Brian and his team and our company needs from an underwriting, and then stuff happens, yes, it will be risk. And maybe I need to have somebody from the risk department do one of these too and help with ongoing maintenance. I think that'd be a lot of fun. So
Great idea.
I know I have a question here. Like the underwriting team recently added like connection avenues. Do you mind helping like add some light to that? You know what I mean? I know it's kind of underwriting kind of felt distance, like this team that kind of exists and nobody can get to. So can you elaborate as to why we did that and what that's hoping to like help?
Sure. Yeah, the underwriting team at one point was, like Keith just mentioned, quite removed from the sales partners and the merchants. We would send back information, usually 100% via email, and it led to a lot of confusion and delays. So what we pivoted to over the last year, I'd say, is called interactive underwriting. And interactive underwriting is something where we've staffed our team with individuals who want to help sales partners and merchants directly over the phone, and also still via email if that's a preferred contact method. But with the phone support, we staff people in that from 10 a.m. to 10 p.m., and that's Eastern time. People can call in anytime, get connected directly to an underwriter, and that underwriter can answer their questions that they have on their account. So if you have a pen that you don't quite understand or need some help with, you can definitely just call right in. They'll be able to answer that for you. If you have a business model, you're not sure if you're able to board it, call us. We can answer that kind of stuff. Really, any sort of underwriting related question, we're happy to take those calls and just give you an answer as fast as possible. Um, Response times are very quick, and we have people again staffed in that all day, so it should be a really easy and nice tool for everybody to use in the future.
Awesome. No, I know I was really, really excited as a sales partner to see that come through because I know that's something I hear from sales partners sometimes. So I think that's another step in our company moving in the right direction to provide even those little bits of help to help people keep moving and selling more accounts. So on that note, partners, our goal is to go out and sell as many accounts as possible, right? And some people, and I have these conversations. Oh, I want to do Facebook ads. I'm gonna put together websites with the links, and what I mean, like they have these visions of grandeur. If I put a website out there and I have some links and I put some money behind marketing, the accounts will just roll in, and I will get merchant accounts the easy way without having to knock on doors or actually have conversations. Um, what are some of the behaviors, especially in that arena, that kind of opens up the door around the realms of fraud, or what can be done, or expectations within the sales partners to understand how to keep fraudulent accounts from coming into your your enrollment portal? And when you see certain things, what are some of the things that they can look for and go, you know what, this one is too good to be true?
Yeah, this is a great question. I think right from the beginning, you have to understand if you're working in one of those lead sources or sales channels, I'll say, where you have like pay-per-click campaigns or online lead buys, online marketing that's going to generate these merchants, those are consistent targets for fraud. Since many of the hacks have happened where basically everybody's identity has been stolen at this point. Mine has, Keith's, yours probably has as well. You may not realize it. It's just a matter of whether some fraudster uses it or not. Now that that's how we are all living and that's the world that we live in, it's really common for fraudsters to target those sorts of channels, use stolen identities, and get fraudulent accounts boarded. So we're very careful with those, and we appreciate any sort of partnership from the sales partner side to help catch those. Some of the things that you can do to make sure that you're not boarding a fraudulent merchant would be to verify the business is actually real as much as possible. Try to look them up, do a little bit of a search. You're probably not going into a retail location if you're getting a merchant this way, but see if there's any sort of information about them. Perhaps even collect some information from the person as you're going through the application process. If it's a business that's owned by, say, a gentleman and you're speaking to a woman on the phone, these sorts of things sounds very obvious, but that's a red flag, and we do see that actually pretty often in our own kind of direct sourcing within our inside sales team. So I think that the common sense type reviews that you do on these accounts goes a long way. The sale is important, but also you don't want to be boarding a fraudulent merchant that's going to waste your time and just result as a decline on our end. Aside from that, look at the story they're telling. Are they actually a business model that makes sense and would be like viable if they operated the way they say they're operating? It's, say it's like a home-based, I saw this earlier today, is a home-based cafe in an apartment, and it was just like a random apartment number. It's, who are they selling to? Their neighbors maybe? And how does that really make sense? Do they have like a food license, and are they getting inspections? Like what's their, all of those sorts of things. So it's, does this story really make sense? Is this a real business model that could exist and support that person at least, or maybe their family? Because that's ultimately what we're talking about here.
Yep.
um, And then also, if the person that you're working with to get these applications filled out is struggling to provide basic information about themselves and the business, we see that over and over again on call recordings. You hear like the paper shuffling when you ask for their social security number or like their date of birth and home address. Like that kind of stuff's a red flag. People should have that cold, just like right off the top of their head. And same with the business information. You should be able to ask some questions about their business, and they should be able to answer those questions in great detail. I mean, it's their business; they should know everything about it. So, just asking some simple questions about how the business works and operates, make it sound conversational and just like you're interested, and you can really draw out a lot of fraud just by having those short interactions with these people.
Yeah, I agree because I mean I've had that before a couple times because I've got some of those links out there, and all of a sudden I get a random, oh, you have an on, sweet, it's a roofing company in Florida. Okay, how in the world did they know about me? Because I'm not doing the pay per clicks. And I pick up the phone and I call them, and there's just obviously, we have to add a layer of common sense. This probably doesn't work, right? And we can. I don't want to, what's the word, prejudge people because I've seen some amazing businesses by people that I would have, if I would have prejudged, been like, how is this person even making this happen? You know what I mean? But yeah, to Brian's point, guys, like one, always try to look at where did this merchant come from? And, did it come from a referral? Did it come from references? Is somebody that talked to you? If it's pay per clicks, if you're actually going down that funnel, one of the biggest red flags I've noticed, I've had like 3 or 4 over the last couple of years come through, is generic email addresses. Especially if it's a business that, hey, we've been in business for 10 years. And it's like ksampson12378 at gmail.com is the email address they use. Like, okay, really? Because honestly, it's pretty darn easy in Google to set up a fake Gmail account like that. If it's been in business for 10 years and I'm the owner, I probably have a ksampson at thebusinessname.com email address. You know what I mean? So, guys, there's even little things like that if you just see it, maybe I need to pick up the phone and call. Maybe I need to do this. And then, the phone number's not in service, or you get a random hello. You know what I mean? Like, instead of it being the business, hey, welcome to Keats Cafe. How can I help you? Or something like, these are some of the things that you guys can just create your own level of expectations, because the last thing you want to do is spending a minute of your time getting an account in our system to have it decline, see those emails go back and forth, because that's all time and energy that's taken away from you selling accounts. It's also taking time and energy away from Brian and his team of working with the accounts that they should be working with.
Yeah, that's all very correct there, Keith. Yeah, I appreciate that.
Cool. Well, I mean, this is about all I have. I mean, again, I appreciate you. I appreciate your team. I appreciate the fact that you've opened up access to the partners to feel more connected. I think that, again, I can't speak highly enough about how big of a step forward I think that is in the overall relational aspect that we have with the partner channel instead of people just being numbers. Is there anything you want to add for our team before I let you go and I jump into any Q&A that's going to take place here?
Sure. I think that it might be helpful to just point out some additional red flags. We were talking about, some things that maybe a sales partner can do to make sure the business is um, a real viable account. But I would also say that there are some consistent red flags we see on fraudulent accounts, and I'll just run through these pretty quickly. But
Okay.
first one is if the business owner doesn't live in the same general area as the business exists. We see this where the business is in California, meanwhile the owner is in Michigan, and none of the information on this owner ties at all to California. Like they've never been there.
Yep.
That's a big red flag for us. So I'd just be careful with those. We've also seen fraudulent businesses use virtual offices and like UPS mailbox stores as their business address. That can make sense for some business models, but generally speaking, it doesn't. And it's a flag for somebody using a stolen identity and just setting up some sort of shell corporation to commit fraud. So watch out for those. Home-based startup businesses, sometimes it makes sense, but it is also something that we see a lot of fraud with. So if you have a merchant who's home based and a startup, they have no operating history, that can be higher risk. If they have a very vague or general description for their business model and they can't really explain how that works, then that's something that you should also be careful with. I kind of mentioned that previously. And then the last one is if you do collect processing statements from the merchant, it would be worth your time to look at them. A lot of times we'll have sales partners send us processing statements that have chargeback ratios that are through the roof, return ratios that are through the roof, things that would, in our opinion, indicate that we can't work with this merchant and they have serious operational issues, I would look at that. If you get them ahead of time and just save yourself some time, and not submit those if they have very high chargeback and return ratios. Typically, we're not going to board merchants who have a chargeback percentage above 1%. So chargeback volume versus uh, overall sales volume, that's above 1%. There's some serious issues there. That's also when the card brands get concerned. So if you see something like that, I would just um, yeah, steer away from those types of merchants.
And I'll add one more thing, guys. And Brian, you can please speak to this too, because I was thinking about it as you said something.
Hmm.
Look, your credibility as a sales partner with us has value, right? If you're only looking at doing a few deals, whatever, you don't care what NAB, its teams, what your name means when it comes through on an email, then just ignore this next statement, right? If you do and you want to be in this for the long game, not just with NAB but anybody, take some pride and credibility in your own name and stuff, right? Because I guarantee you, there's a big difference if forget Keith Sampson, the NAB employee, with Keith Sampson, the 10-year rep that's been boarding deals at NAB, that doesn't have bad deals, that hasn't gotten, I'll have any issues with fraudulent accounts and all this stuff. And then there's an account that comes along that's a little bit different. Their model is a little bit different, but I've met that person in person. I can vouch for all these different things. There's different weight. If there does need to be a little bit more of a hey, we're gonna follow the lead here versus here's a sales partner, Roger, whoever, that has constant problems, that does this, that is always arguing with underwriting for the exact same question. Which one do you think is going to have a little bit more merit in the overall credibility of their decision? Right? Like, take pride in the future you want to have in this industry and with North American Bank Card.
Yeah, that's a great point, Keith. And you're an excellent sales partner to work with, one of the best in the business. So I think that we all on the underwriting side enjoy working with you a lot. We wish everybody was like you. And you're correct that that relationship matters and your reputation matters. If somebody's submitting a lot of fraudulent deals to us, we're watching them closely, but not for good reasons. It's not because we want to do them favors or help them get exceptions and things like that. Meanwhile, for someone like yourself with a very good reputation, clean portfolio, we're trying to do everything we can to board your merchants, and that matters. So it's a good point.
Cool. Well, Brian, thank you so much for this time. Thank you for bringing value to our organization, to our sales partners, and helping us all achieve a higher level of success.
Hmm. Man, my pleasure. Thank you for having me, and I hope that we can continue to work together and do more things like this. Thanks.
Awesome. Thank you.
All right, so 3 takeaways to help you in the underwriting process. First and foremost, this is a mind thing, right? Change your mindset. Underwriters are our friends. I need to move my microphone. Sorry, let me say that again. 3 takeaways to help you with the underwriting process. The first one is all about mindset. Like, change it. If you've got a negative view of underwriting or you don't view them as your friends, they are there to help us. Like, it always cracks me up when I am on some of these Facebook groups and I see people who are trying to build a business in this industry, right? And they just razz or trash underwriters. Like, it just shows me how small-sighted they really are on the bigger picture of what they want to achieve and what they want to do, right? Number 2, apply empathy and understanding to what they must do and they have to go to. I mean, like, one, my personality is not, I cannot sit there and do underwriting all day. But if I did, I mean, just think about that, right? Think about all of the stuff that they have to do on a regular basis. And the last thing they want to do is come back and tell somebody no, or we need more stuff and deal with the questions and all that. I mean, just have some empathy. If there's a reason they're coming wanting more information, it's either there was a mistake we made as a sales partner and we weren't clear on something and that was on us, or there's a real legitimate reason. Like, NAB wants to grow. NAB wants to get more mids every single day, and we do, right? A lot of them. But so nobody's there trying to make your world difficult. There's a legitimate reason that they're asking. But then number 3, and this is one of the biggest ones I think that we can do, is learn how to properly communicate to your merchants when other needs are being requested. Like, I recently had one. I have a merchant who literally just dealt with this week. And this was something on a risk side because it came in after underwriting. But even when I boarded on underwriting, they had some questions because this guy had a relatively higher ticket for a home-based business. So no brick and mortar, higher average ticket, a little bit on the future deliverables side, and definitely the opportunity for chargebacks. So he is a guy that does custom suits. He literally will show up and do a pop-up event or show up at somebody's office, a university, and custom fit and do custom fit suits and apparel, right? You're talking an average ticket of 800, 1200 bucks. And again, no brick and mortar, no past business history because it's a new business. Of course, they're going to want to get some information. And that's the way I went to this guy and was like, look, here's the deal. And I met him personally. I know who he is. He came through a network that I work in. And I just explained, like when I boarded and they came back and they wanted to see this, 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 and this. Hey, I need to get them a copy of your business license. And it's just due diligence, right? Then it happened after they were going, there were a couple transactions for whatever reason. Don't know if it was the card or he had one that was like $2,000. So it was over his high average ticket and or high ticket limit, and that just put out a fraud alert, right? It put out, hey, we need to review this. Not a fraud necessarily, but a review. And I had to work with him. They wanted to see bank statements since he opened because they needed to make sure that he had an average daily balance to cover the chargeback if that was in a scenario. And they wanted to see a couple invoices. They just wanted validation. And if I would have gone to him and said, hey, look, Philip, look, I'm sorry. This is such junk. I can't believe they're doing this. I am so, so sorry. Like, you know me, I really want to take care of you, blah, 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 blah. Like he would have had a negative perspective of the entire thing, right? But instead, I went to him with like, hey, Philip, I want to get this taken care of for you as quickly as possible. I understand that it's an inconvenience, but let's just get this done right away. But I want to explain to you the reasons why they're asking for this. Number one, because you don't have a brick and mortar, ultimately it makes any type of business like this a little bit more risky. Number two, you are doing custom suit fittings. And let's say you do, and I use an example, let's say you do a suit for somebody and they don't like it. And you try to do the best you can to make it right, but they still charge it back. And it was a $1,200 suit. I mean, they need to make sure that you've got an average daily balance to cover that because if you don't, that means we pay. So this is just part of the process on a business like yours because you don't have a brick and mortar and you have future deliverables and you have a pretty high average ticket for a home-based service. Like those are three things that this is just the process they need to go to. And he goes, no problem, I'll get them for you. Right? The way that we approach our merchants when we need extra things, one, it sets the stage for the overall experience of the company. But number two, you're really doing yourself a favor by being the hero and positioning it as the expert the right way when you do need to go to something like that. So I don't have a Q&A slide to pop in. Forgot to do that, but let's go to some questions in this. I'm going to go back and I'll answer some on debit if I need, or on the other stuff if I need to, but let's hit this. Ruben, you are welcome for the interview with Brian. I actually got another text from somebody else saying there's a really good session. I was hoping it would be beneficial. Now we need interactive. Yes, we're working on it, Maria. Thank you. Yes, the interactive piece is great idea, including the underwriting segment. It would also be good to add risk. I 100% agree, Maria. After doing that, and I think I mentioned in there, like, ooh, we need to do one with risk and understanding it. All right, so Jeff has a question. Touch on cannabis industry here in California. Some shops take cards, others take only cash. We are not touching cannabis at this time. Right? Doesn't mean we won't in the future, but right now, no cannabis for us. CBD we can do depending on the states and different things, but no cannabis.